Happy day, everybody, and welcome back to Mortgage Talk and More. I'm excited to talk with a friend of mine, a good friend of mine that I haven't seen in a little bit of time, but we go way back. We've done a lot of business together, and it's on a subject that is sort of a mystery to a lot of people. It's one of those things that you kind of have to have by law when you buy real estate, but people don't really understand it so well. So I want Michael Swartz to speak to us about title insurance and his position with his company, which is PSG, which is Priority Settlement Group. And we're going to go through several questions, kind of a 30,000-foot conversation around title work and why it's necessary and what it does and all that good stuff. So welcome to the show, Michael.
Well, thanks, Mark. It's about time you had me on here.
Yeah, Big Mike is in the house, that's for sure. So I know you've been in Austin a long time.
Since 89.
Since 89.
Yeah.
I got here in 77, so we're sort of in the same genre of the time. And you used to be in the mortgage space too.
Yeah, it was.
Tell us about your background.
So, got here in 89. Came from Florida. You know, what way most people come, leave their home state and come somewhere else,
right?
Chasing a girl. Got here.
Those days are over, though.
Of course.
Yeah.
Happily married.
Amen.
4 kids, 2 grandkids.
Awesome.
I have no spare time.
Awesome.
Or spare money.
Yeah.
Yeah, it's just, Austin's been an amazing place my whole time. I got here. I had some friends back home that were working in the wine business for a company called Southern Wine and Spirits. I saw what they were doing, and I knew I wanted to get into sales, wanted to get in the wine business. And that's a whole nother story, but got here 2 days later. I was a sales rep for a company called American Wine and Importing, which got bought out by Glazers a couple years later. Rose up, to division manager. Was great. My next promotion was going to take me to Dallas. I've been to Dallas.
I don't want to go back.
I want to go back. I moved to Austin for a reason.
Right.
I saw Lake Travis. I'm like, wait, there's nothing in there that'll eat you? I came from the coast.
Yeah.
So it was, So we got there, and I didn't want to move. So I'm like, what are we going to do? Well, the .com boom was going on. I don't know anything about tech. If we had VCRs, mine would be flashing 12 right now.
Right. Right.
But I had an opportunity to get in the mortgage business. I got introduced to it going through the mortgage process, and I thought I could do better than the experience I had. The manager at the place I got the loan, while discussing my experience, offered me a job. I took it. It was great. Loved it. But then the crash came.
Yeah. 08, 09.
08, 09.
I was there.
Needed to do something else, and the title industry came calling. And
so fast forward, it's been 15 years or so?
Yeah. Total 24 years in the industry. Between what I call the real estate industry, mortgage, title.
Yep. The 3 legs.
Yeah,
basically.
And it's been fantastic. And title has been a fit. Like, I like delving into details. I like unwrapping things. And when you get a title with a lot of things on it rather than a clean one, you've really got to go to work to clean it up.
Right.
And I like the whole process.
Well, you and I have closed dozens of deals together over the years, so I know you're an expert in this field, which I'm not. So I like to have people on there that I can learn something from. So let's talk about title insurance, exactly kind of what it is. Why is it necessary? Let's kind of start with the basics.
Okay. And by the way, thank you for the compliment, but I'm just lucky to surround myself with really smart people.
Yeah. Amen.
They make me look good.
That's why I have a processor loan offer can take care of me.
Yeah, no. So, the basics of title insurance and why you need it. The title industry, our basic job is to take an existing piece of property, whether it raw land, has a house on it, has a commercial entity on it, and it is to transfer the ownership in such a way that if you're buying the property, you receive the property not only, assuming and knowing that nothing from the past can reach out and bite you.
Mm-hmm. When you say bite you mean it shows interest in the property?
Right. Like, no, there's nobody that can come up and knock on your door
Oh,
one
by
day.
the way.
By the way, this is my house.
Right.
Right. Because we have to do all the searches and look up errors. So our job is to accurately transfer the ownership of property and then issue insurance. And title is the only insurance that works in reverse, right? You have car insurance and homeowners insurance, right? And you get that to protect you from a future event.
That's right.
Title insurance protects you from
particularly life insurance.
Right. That's a whole nother subject. But it does. It prevents the things from the past from coming up and get you. Now, from the lending side, right, it ensures first lien position, right? Because as a lender, you want to know that should something happen like a foreclosure or a death and a default, that you're going to get made whole first.
Yeah.
So those are the two: lenders, title insurance, and the homeowners.
Your collateral is protected.
Correct.
Yeah, got it.
Correct.
And speaking of that, there's two terms that clients will see on a settlement statement, or what we call CD these days: a lender's title policy and an owner's policy.
Yes.
Can you explain that a little bit?
Yeah, and so that's just a real natural continuation of what we're talking about. Is, again, lender's title insurance protects the lender. It is there to ensure that first lien position, so that they get made whole on their investment should there be a default on title. Default on the mortgage.
Okay.
Homeowners title insurance, that protects you again from people knocking on your door saying it was my house, my grandfather, my father.
Got it.
Right. I'm an heir, and you have to make me whole. It prevents, a lot of things. Fences result in most title claims, right? Because people argue, well, no, that's on my side. No, it's on my side. So then you get the survey out, you look at the survey, and if I issue title insurance and I said that, I basically ensured that the fence was in the right place, there's a claim that would be made, and then you as the client would call in to whoever I wrote it with, whatever underwriter, which is the insurance carrier.
Okay.
They would review it, and if they agree, they would then pay to move the fence. You would have no out-of-pocket expense for that.
Okay. All right. That's a good question, because pretty much all in the old days, if you got a new mortgage, you had to get a new survey.
Yes.
But these days, you don't really do that anymore.
On purchases, we do. Purchases and what's called meets and bounds property, which are usually larger acreage. If it's lot and block, we can use the existing survey and it also depends on the title company's underwriters. The ones we work with, we have 4 of them, and they all allow this. If the property is under $1 million, is lot and block, and has a current institutional mortgage on the property, if all 3 of those are in place, I can issue survey coverage without having to review the actual line drawing or order a new survey, which right now I think is saving people between $400 or $500.
Yeah, $400 or $500.
Yeah. So there is a significant savings, not only in cash but in time, because you remember during the boom, to try and get a surveyor out. I mean, it was
forget about it. Yeah.
Yeah. It was tough.
Took 2 months to get an appraisal.
Yeah.
But those days are long gone. And we talked a little bit before the show about cost, because title insurance, like you said, is promulgated as far as fees go for the most part, as far as the insurance costs. Is that correct?
Yes, sir. That is correct.
Okay.
So,
and what are the different categories of costs? You have the premium.
Right. So premium is based on price. And there's a formula for it. I do have it, but it's a long one, and we don't have enough time.
No. We don't get in the weeds on that.
That tutorial. But yes, so I mean, you can go online, and there's pretty much, if you go to TDI, which is Texas Department of Insurance, they will have the standard promulgated rates published, and so you can do a check. Any good title company has a rate quote calculator.
Yeah.
You can go to their website, plug in your numbers, and it'll show you what the costs are. And a lot of times you'll see the premium number but then you'll see, what we call endorsements, right?
Yeah.
You'll see one like for survey coverage, the T19, or, if it's acreage, the T30. And what endorsements are, right? That's industry specific term, but when you get insurance for your homeowners insurance,
Right.
let's say you and your wife want to insure your jewelry.
Okay.
Right. You get a
Endorsement.
rider.
A rider.
Rider.
Right.
Riders
Right.
and endorsements are the same thing.
Okay.
So it's just, breaking it down to terms people
That
understand.
makes sense. That makes sense.
We
And
can-
who requires those endorsements? Is it the lender
It is the lender.
typically?
It's typical because they want extra coverage depending on the type of loan it is.
Mm-hmm.
So if, again, if it's acreage, we're going to wind up issuing a T30. That involves the T, and then title, you'll always see, they always come with either a P or a T. Procedural rule is a P, tax rule is a T. Those are the two main things
Okay.
that govern them.
Okay. All right. And aside from that, each company, each title company, I should say, is going to have their own, if you will, costs, their own
Correct. Agency fees.
Agency fees.
Yes.
And I know you guys are pretty aggressive on those as being pretty conservative. I mean, as far as being pretty.
We do. So, when we open Priority,
You were saving my clients a lot of money. Let's put it that way.
yeah, well, again, we opened Priority 8 years ago. December 1st is our eight-year anniversary. And when we were building this, we thought about it, right? Title premium in Texas, it's pretty robust.
Yeah.
I mean, and we
Is
figured
it more robust than other states?
um,
Or do you know?
there's about 5 or 6 states that are on par with us.
Uh-huh.
And then other states, the title policy is cheaper, but all the fees are significantly higher.
Uh-huh.
Some states like Pennsylvania has a big transfer tax, like it's staggering.
Oh.
So, it is.
But that goes to state, doesn't it?
It is. It's state specific.
Yeah.
So getting back to your original question, agency fees. So every title company is required to set their fees, and what they are has to be offered broadly across the community.
Mm-hmm.
Now, in our case, it's statewide. There are title companies that adjust their agency fees based on region, but with it being as expensive as it is, we decided we would keep the fees low. So we don't charge we don't charge escrow fees, tax certs.
Mm-hmm.
If you need a mobile notary, we don't charge for any of that. We just we cover that. It comes out of the title premium on our end.
Uh-huh.
And we pass that on to the consumer. If it's a purchase, it's a $450 escrow fee for us, which is still significantly lower than a lot of places out there.
Right.
But then again, that and a courier fee, no other junk fees. If you need mobile notaries, they're included, and we run probably the largest independent network of mobile closers statewide.
Yeah, because I see a lot of times on closing statements, with different title companies, because we close all over the city with different companies. They have little fees, but they add up.
They do.
Overnight fees or whatever.
Well, right, and that's the thing, right? It's like the old cable bill story, right?
Right.
You're getting your cable for $49 a month, but when you're done, you're at $200, and you're like, it's not $49.
Right.
Right.
Yeah.
And so they do add up. And so we try to eliminate them or keep them as low as possible.
So, we kind of talked about this briefly a minute ago, and I always kind of looked at it this way because this is my 40th year in the mortgage business. That's all I really know. I don't know how to sell real estate. I don't know your business. I just know that you exist. But there's kind of 3 legs of buying a property. Typically, there's the realtor. Typically now,
Mhm.
and there's the title company, and there's a mortgage company. Generally, unless you
Right.
pay cash. Tell people how, because a lot of clients call me about what you do. And I said, well, you really need to call it a title company. So explain a little bit more in detail about what your service is in a transaction.
Okay. And thank you for that question, because a lot of people, we do such a good job as an industry. And I wholeheartedly believe this.
You're like a secret.
Right. That we almost do too good of a job in the fact most people assume you send your contract or your title order into an escrow officer. They plug it in the system. They print out a title commitment. And then we annoy you for 29 more days until we go to a closing.
Yeah.
And the fact is, we have to coordinate the payoffs, whether it's with the lender, whether we have to go to the existing lender, or if your people are going to get it for us, right? We have to coordinate the survey. We have to coordinate with the HOA. If there are, one of the big things that we run into a lot in Texas are, dead people and airship issues.
Sure.
So we have
That's
to,
probably a big one.
it's huge because we have a lot of developing areas, right? You go up to the Fort Hood, Fort Cavazos area, San Antonio, which is emerging, right? A lot of these properties were generational, passed down from great grandparents on, and most people just got a deed and a will and toss them in a drawer.
Yeah.
Right. And so we have to record them. And if there are heirs, we have to find them all before we can transfer the ownership, either figure out what their buyout is, from the person selling the property, like how much do they have to pay the heirs, or if they want to sign off on it, we can do that. And if you can't, right, like we have a particular transaction now where we have older parents. They were in their 90s, so their kids were in their 70s, and the kids have started to pass on, and so it was a blended family. So we're now spending months tracking down because not everybody knows where they are, and we can't find two of them. So there's a process where you have to go to the probate court, and you have to apply to have the courts first go look for this person. I believe it's called a Chapter 11 hearing or a Rule 11 hearing. And they go and they send special investigators to try and find these heirs. If they can't, then the court can divest the interests of the missing heir.
Okay. But that could take some time.
It could take 6 months. It could take a year.
Wow.
It's most of the time, though, it's not that deep, right? We can find the people. And if there's no will and no probate in Texas, we are very lucky. We can actually use what's called an heirship affidavit, where somebody would like them to know them for at least 10 years, but at least we'd prefer 20. Somebody that knew the deceased, knew if they had kids, how many times they were married, and we can get them to sign off on a notarized document. If we can get two of those, our underwriters will usually allow us to move on with a sale.
Okay.
So yeah, there's a lot of behind the scenes stuff we do.
Yeah.
And
are y'all only in Texas?
The part of company PSG, Priority Settlement Group, we are only in Texas. We do have a sister company. Some of the partners of the company, they own Priority Title and Escrow based out of Virginia Beach. That allows us to cover the rest of the country.
Oh, okay.
So,
but you specialize in Texas. You personally.
My world is Texas.
Yeah.
I just, why go anywhere else?
Yeah, exactly.
Right?
Exactly.
They only got 49 states. We got 254 counties.
Amen. There's a lot going on in Texas. That's for sure.
That's it.
Let's see. So let's talk about, since the cost, for the most part, there are some ancillary costs that aren't necessarily promulgated by the state, but how does somebody go about choosing a title company?
It's an interesting thing. So a lot of times the realtor will have a preferred title company and they'll offer up a choice, but usually, the top of the list is their preferred.
Based on service, their experience,
based on past experience, service.
It could be some of the ancillary fees you're talking about,
right?
While you may save their clients some money.
Yeah, and usually when we pick up, a new real estate agent or a new lender, it's because we offer either something different, or they had an experience that they want to try something different, and so those are our opportunities to do things. From the consumer side, right? We have very little consumer direct driven business. But the best thing I can recommend, go to Google, look at some reviews. We're all going to have mixed reviews because it's a business driven by people.
Right.
And, you most of the time only get people wanting to write reviews when they've had a bad experience.
That's right.
But
although all mine are 5-star,
exactly.
I just want to put that out there.
Ours too, right? Yeah, no, they're not. But the fact of the matter is, right, I don't think there's a single title person that gets up every day and goes, I'm going to do a bad job, and
No,
I'm going to see how many people I can piss off today.
No.
It's just
Y'all do a great job.
It's a situational thing, and we all,
And typically, when you don't understand something, you're more likely to get frustrated.
Yes.
Because you don't understand how it works.
Yeah.
It's the same thing in my business. I'm always sometimes having to re-explain things to clients because they don't do it very often, if ever. You know?
Well, and then, even from a title company and lender standpoint, we have different rules that govern us. So something that a lender or a broker might allow, we may not be able to do. And so that puts us at odds when it's like, well, my underwriter said we can do it. Well, my underwriter said we can't.
Sure.
We got to figure out a way to get past, the bullheadedness of it all, and get to the resolution.
Well, that speaks to how can people get a hold of your company if they want to know more about your company. Is there a website they go to?
Yeah,
or
so you can go to our website,
email or whatever.
Website is Priority Settlement Group of Texas.com. You can go there. My cell phone number, I'll put it out today. It's 512-731-4626. I don't have a desk phone. It's the only phone number I have. It's the only phone I answer.
They still make those desk phones?
I've seen them. I took my kid to a museum once. They're like, what's that? What's that thing hanging off? It's called the cord.
Yeah.
But you can go to our website. You can go to Facebook. We have a Facebook page. We have an Instagram page.
Okay.
So we're pretty accessible.
Yeah. Well, I just know a few years ago when we were doing a lot of refinances for folks, I'd ask them, do you have a preferred title company? Not one person said they did. So I would usually direct them to y'all, and y'all did a great job. So I had no reason not to.
Well, I appreciate that very much. And that's the thing. That's it's a key point, right? If you refer us, your professional reputation, in my opinion, is now involved and on the line.
Yeah.
So we need to do a good job.
That's right.
Right. It's not they may never use me again, but more importantly, they may have had multiple properties. They may have been connected to a bunch of people that were going to do business with you. And now all of a sudden, like, hey, we had a bad experience with this title company. He doesn't know what he's talking about.
Right.
So it is our job to protect your reputation as well.
Well, let's talk about some of the pain points too around that.
Okay.
What do you see on maybe not day-to-day situations, but in general, the pain points of being in the title business? You talked about some of the things like probate, but what are any others that come to mind?
Oh, I mean, there's tons of tax season is a nightmare for every title company.
Yeah.
Right. Because starting in October, right, the tax bills start coming out, and they come out from all the counties at different times. And
when do they usually start coming out? Middle of October?
Middle of October.
Okay.
But some counties, they run behind, smaller counties. And so we're at the mercy of the county when we get the tax bill. But once we get the tax bill, if it says taxes are due, even though the client has up until the end of the year to pay it, if they're due and payable, we have to collect for it, right? We have to make sure they get paid. And so it's always a dance, right, to convince people like, hey, I know you're doing this, but your tax bill just came out, so now I need $6,500 extra dollars.
And part of that responsibility should be to the lender too.
Yeah,
they should participate in that conversation.
And for the most part, they do. But again, it's hard to tell a consumer why they're paying this when most of the time they don't think about their taxes because they're escrowed.
Right.
Right. Same thing when you have to tell them, hey, we're going to have to pay your, on this new house, we're going to have to pay your insurance plus pad your escrow account. And they don't remember they did it 10 years ago when they bought their last house.
Yeah.
And so it catches people off guard. So,
or in a situation like myself, although I did know this, but my last property we bought in the cellar was 106, and he'd been there for 40 years.
Wow.
So he had an over 65 exemption from day one. And so the taxes were very low, like $2,000.
Wow.
And I would have liked to kept that. But
me too.
They're like, no, Mark, they're going to go up, because once that exemptions are taken off the tax rolls, if you will, then my taxes went up 5 times probably,
Oh, I believe it. Good thing is though, right? The new homestead rate goes into effect this year, where you were able to write off, you're able to write off 40,000 of your value on your homestead property, and now it's 100,000.
It's 100, and they're talking about maybe that going up.
Yeah,
So you talked about some of the benefits of a homestead, versus investment properties
yeah. So
from your standpoint.
yeah, so most people know, right? Homestead exemption,
Right.
which is a tax exemption. It's part of the tax code, and that allows you to file on your primary residence, and get that protection. But it also affords other protections. If you default on a credit card, they can get a judgment, but they have to remove it should you refi or should you sell. It doesn't stick. Your homestead protects you from things like that.
Things like that.
Yes. Our homestead laws in Texas are the toughest,
Yeah.
but they offer the most protection of any state out there.
Yeah. Well, that's good to know. You taught me something today about that because I didn't know that. So anything else you want to share in the last few seconds here?
No, I mean, I've really enjoyed being on here.
Oh, it's been a blast. I know it's been fun.
Hopefully it's not another 20 years before you invite me back.
Well, we'll have to re-up, because there's a lot more to cover. I had 25 questions here. I think we probably got to about 6 or 7 of them.
Yeah, would love to. Let's see the reaction. If people don't show up at the studio with pitchforks and torches, I'd love to come back.
This is a good conversation. It's a good thing to understand because it's still kind of a mystery to me, and I've been doing this a long time. So I appreciate your time, brother.
Thank you, man.
We'll do it
As
again.
always.
All right.